I am Nicolas Dufourcq, the CEO of BPI. Let me present the panel of this afternoon. So we have Fleur Pellerin, who's heading a new fund in town in Paris called Korelya. Fleur was the Ministry of Digital Affairs in previous governments, and then Ministry of Culture also. And she's now an entrepreneur, and you will see that she's a fast growing entrepreneur. Then we have Fiona Darmon, a well-known GVP partner from Jerusalem. Then we have Philippe Botteri from Accel, based in London. And we have Yann de Vries from Atomico, based in London, also the fund which was created by Nicolas Zenström. Huh? Okay. So this is for the presentation. Maybe the first question to the panel would be your comments on the sort of electricity that we see across Europe today. I mean, it's a plain vanilla question. Are you optimistic for the continent? Is there something new? And if yes, what is really new?
Okay, start. I think, yeah, I can feel also the vibrancy and the dynamism in the Europe tech ecosystem. So I think definitely something is going on. And I think when we compare ourselves with other ecosystems, whether it be the United States, of course, but also Asia, but also maybe Israel, where lots been going on because it was initially the startup nation, I think we can say that a lot has changed over the past 2, 3, 4, 5 years. And I travel a lot in Asia, and I think now Europe is raising a lot of attention from potential Asian investors. So definitely, in terms of entrepreneurial mindset, in terms of also investment, I think the investment industry, VC growth, etc., is really consolidating now. In terms of talents, I think there's a war on talents right now. We have great engineers, we have great entrepreneurs, we have great creative industry creators in Europe. So I would say definitely I'm over-optimistic about what's going on.
What has changed seen from Israel?
Well, just one general comment before that, and I was saying it before to my colleagues, is my amazement and impressions from seeing the conference this year. You're already seeing a dramatic change in the mindset of the entrepreneurs. You're seeing a lot more innovative and disruption in the technology. You're seeing, a much more global view of the companies. You're seeing really a whole new wave of innovation that has much bigger aspirations, that is truly standing out. And I think that, as compared to Israel, that's really what we're about in Israel. And I think in Israel, it's a different form of maturity. It was a little bit quicker to the gun with more challenges in scaling. And Israel, too, is now undergoing a whole evolution of maturity that is being translated to the big exits we're seeing.
And Philippe, do you see an improvement of the quality of the deal flow, for example?
Well, I think one thing which is very important to mention is that Europe has demonstrated in the past few years its ability to generate multi-billion-dollar outcome. I mean, you look at Supercell, it's a $10 billion outcome. You look, you had King.com, you had Zoopla, you had Showroom Privé, you had Criteo, you have great companies like BlaBlaCar that haven't exited yet but are full of promises. And I think it's very important because the question, so I used to be in Silicon Valley 10 years ago, and the question was, can Europe generate a $1 billion outcome, right? And then the question became, can Europe generate a $10 billion outcome? And now it happened. And so now the question is, can Europe generate a $50 billion outcome? And then my answer to that is just wait a few years. So we're very excited about that.
And Yann, you think we can generate 50 billion euros European tech companies?
Look, I think we start to have the ecosystem that can produce that. I think what's interesting now is Europe is very well positioned in AI and deep learning and big data, and that is the strategic vector of growth for all the big tech companies. And I think the talent that Fleur was mentioning earlier is world-class in Europe. You see some of the best research centers in AI being implanted in Europe from Facebook, from Apple, etc. So that is showing that in this war of talent, Europe has become a center in AI. You look at DeepMind, you look at Improbable. The best companies in the world are looking for those talents in Europe. And that, I think, will create a virtuous effect where obviously the learning will come, the exit will come, and the three entrepreneurs coming up with that knowledge will then be ready to build these next 10 or $50 billion companies.
So we see that we have the sort of source and ground of talents in the continent, but what still misses for hyper-scale companies to emerge, really? Because we know that the scaling is quite hard.
I think we we do it in order. I think we still might have a problem with the growth phase of the companies. I think we're quite good now to deal with the early stage, with seed, early stage, and maybe Series A, B. But maybe we tend to need to have more experience in a very successful Series C. We probably lack a bit of liquidity to have very exciting exits like the one you were mentioning. So probably what misses now is to focus on the growth segment of the financing market. So that would be my concern.
Do you agree on that?
Yes, I think one of the key parts of being able to continue to scale a company is to develop, role models, which I think is the importance of having big exits. Patience. I think sometimes entrepreneurs tend to be a little bit quick to the gun, depending how young they are, and sometimes it impacts their decision-making power. The younger they are, they're an entrepreneur at heart, so they'll do a quick exit, and they'll come back within 2 to 3 years and be ready with their next company. I think what's important really to create these multi-billion-dollar companies does come down to the ecosystem. If I do refer a second to Israel, we have 300 multinational groups on the ground. And so that is a source of acquisition, that is a source of innovation, that's a source of knowledge share, and it's a shortcut into the market. And I think that, cultivating those networks and relationships, which are the demand side and the supply side, is a very key part of developing the right and next unicorns.
I would probably have a slightly different view on this. I mean, one thing which I clearly noticed in the past few years is that the level of ambitions of the founders in Europe has really changed. I mean, they're not here to create a small company, they're here to conquer the world. And I think there's been enough examples in Europe to really give credibility to this level of ambition. And if you look at companies in Europe, I mean, they can raise a lot of money. I mean, I'm sure you have seen in the news last week, Korelya just announced a $53 million round. I mean, you see a company like Deliveroo in the UK, which have raised, close to $400 or $500 million. I mean, BlaBlaCar's raised a lot as well. So the capital is available to raise, I think, this company. And so we're starting to see this happening. And I think this trend will accelerate.
I think another thing to add here is that the founders now don't have the automatic knee-jerk reaction to go to the US if their company goes big. One, I think they're starting to grow within Europe, right? They're hiring in Europe to go international, and they don't necessarily relocate their company into the US right away. I think we're starting to see serial entrepreneurs that are finding it more attractive to stay in Europe. They build their own network. They have the best talent here. It's actually cheaper than in the Silicon Valley. There's actually more developers in Europe than in the Silicon Valley, which very few people know. So I think now the incentives to go to the US right away, I think, are becoming less. If you have a SaaS business, maybe that makes sense. But I think in general, we're starting to see European companies even thinking of going east first before they go to the US. And I think that helps grow and consolidate the ecosystem, and that it helps attract also global capital who wants to build really great companies out of Europe.
And when you see the extreme speed of development of the tech scene in China, do you think that our entrepreneurs should, as soon as possible, plug themselves to that other continent also, so as to have a chance to become big companies in Europe?
Okay. Well, I think the money the Chinese companies spend on R&D, on training talents, on growing their companies, in a context where state protectionism actually helps the company grow on the domestic market, which is already a huge market, is definitely a huge competitive edge for these companies. So I'm a bit not afraid, because I said earlier that I'm optimistic, but I think there's an enormous challenge here for European, also for American companies, to be able to deal with that. And especially what worries me most probably is the ability of Chinese companies and also of American companies who have a lot of cash to invest massively in R&D and especially in AI, where business models and case use are not obvious today for companies to strengthen their own business models. So it's very difficult, I think, today to grow an AI company in Europe if you don't have a lot of money to back the growth of the company. So my concern is that the Chinese might have a competitive edge because they have a lot of resources, financial resources and human resources to inject in their companies. And that's probably an area where we will need some public support or a lot of risk-taking from private parties to be able to grow companies in Europe.
So what's the GVP view?
Yeah, so I don't know how many in the audience had the opportunity to listen to Daniel Zhang before, the CEO of Alibaba, and he made a very interesting comment. He said that Alibaba is a global company born in China. And I think that for those of you who don't know, JVP, one of our LPs, is Alibaba, and we have the privilege of working with them extremely closely when it comes to sourcing and identifying innovation in Israel. And I think what's interesting is the way and the curiosity that despite the extremely large addressable market that they have, is the understanding that in order to continue to grow and go forth, they need to innovate outside, they need to understand outside, and they need to see the trends in all the key areas. But going back to your comment is actually that the other side of the coin, which is a very good friend of mine from one of these large corporates in China said to me, you can't be a startup who also goes to China. You have to be a startup aiming for China. And I think what we're starting to see in Israel, and I've seen this also a little bit outside, is that we're seeing a new wave of startups that instead of heading west, is actually tailoring its product automatically to head east because it has a whole different culture. And especially when you need to work with these massive multinationals, you also need to know how to get in there.
Do you both see that also? Startups which decide to attack China first before Silicon Valley?
No. and honestly, I'm not sure that what we would be looking for. I mean, China is such a hard market. I mean, we have seen it with Uber. I mean, Uber raised close to $10 billion and they didn't win in China. So how can a startup, which $5 or $10 million win in China? I think it's very hard. The part which I think is interesting about China is that now we're seeing the Chinese giant, Tencent and Alibaba, interested in the European ecosystem and trying to make acquisition and making acquisitions. And we saw that with Supercell. So the largest acquisition was actually in Europe was made by a Chinese company. So I think that's very interesting. And the other thing which is interesting is that some of the very successful Chinese startups are looking to expand internationally and looking for global investors. Companies like DJI, for example, where we invested $80 million or $100 million in the company. So this is where I see the opportunities. But backing a startup, a European startup, saying I want to go China first, I think that's challenging.
And Yann, what do you think should be the role of corporate venture in Europe to help generate those European assets that would consolidate the rest of the ecosystem?
I think they have an important role to play. I think Europe has a very rich set of corporates across multiple sectors, from healthcare to infrastructure to finance, etc. And I think all of them are now getting very close to the startups. I was on a panel this morning with the Eurostar. They're trying to see how startups can help them innovate their services. And so I think they're all embracing and trying to find ways to work closer with startups, both through financing, through partnerships. And I think that is going to help them a lot. I think the model is still trying to be proven. I think everyone has a bit of a different approach. Some build their own internal teams to try and do that. Some outsource that, which I think everybody has to find a way depending on their strategy. But I think the good news for Europe is that this will play, both in terms of capital and partnership, a big role in accelerating the ecosystem.
And do you see, all of you, examples of integration of startups in big classical corporates which are really successful, to be honest?
Difficult question.
You're not obliged to answer.
Well, we have actually an interesting company in our portfolio in the area of AI and deep learning called, I won't name it here yet. And what was interesting is the way that we collaborated with GE. And I think that what we're seeing now, and I think I'm seeing it also in Europe, but I'm talking specifically about Israel, is that the big corporates are actively pursuing new ways to tap onto innovation. So in the specific case of Israel, you're seeing them setting up accelerators on the ground, as of course in Europe. You're seeing them actively going into the incubators to source the technology. They're going into the universities to source the talent. And then they, further on buying them, but they don't want to wait till they come. They actually want to go and be part of the go-to-market strategy, the product evolution, and they want to really be hands-on because to a large degree it's shortcutting for them a lot of the development. And if I talk about the situation of GE and Federer, the company was only 3 months old. It was just out the university. It was an idea by 2 professors that we brought into our incubator. And they came in, and together we really created a very compelling go-to-market, which went on to be a key part of the Predicts platform. But I think the answer to the question is, it very depends who the corporate is. There are corporates that know to work with young companies, that know to work with ideas, and there's corporates that it needs to come to them much more fleshed out, much more mature, and much more ready for the market.
And do you see a difference of nature between US corporate venture and classical European corporate venture, continental?
Just maybe to go back to your previous question, one model that we have seen being quite successful, which has been, I think, mostly driven by financial services, so large banks and insurance, is they have what they call a CTO office, or basically a group of people in charge of innovation, which maintains very good relationship with the different venture funds, try to understand what companies could be interesting for them, and then are in charge of finding the business unit which would own the technology, make the introduction. And so for them, the access to technology is not about, well, let's have a corporate venture and try to invest in these startups. It's more, let's understand what can help us and find the way so that these companies can get to the right person much faster so we can develop this innovation faster.
On the difference between US and European corporate venture?
I mean, it's hard to generalize, I think, but I think in the US companies probably started earlier on this journey. I think you look at companies like Cisco who have, been doing this for decades and have potentially 50 or 100 people that are working around this activity. It's become core to them. They grew through acquisitions. They made hundreds of acquisitions. So it is a core fundamental part of their culture. Some, I think, are just discovering that and are starting to feed that. And so I think there's a level of maturity that is probably very different. And also their proximity to the Silicon Valley obviously helps them a lot, right? And I think in Europe it's more dispersed, so it can be a challenge for the corporates to have within one office, and how do they find access to all the different startups that are spread out across Europe.
Now, another set of questions relates to the nature of Europe, which is 27 countries. Huh? So it's not an empire like the US. It's not an empire like China. You need to organize transversalities between all those cultures, languages, and so forth. So how can we do to connect all those ecosystems and create velocity between the cities, between Stockholm and Paris, Paris and Berlin, Berlin and London, and so forth? I mean, should we have a network of VC funds which is more collaborative? How should we do that? Because at the end of the day, it's an impediment for startups.
Yeah, I think there's something going on actually right now, and we started spontaneously to establish relations together. I think we're speaking to each other. We're meeting we have many occasions to meet. We have some of us have fund of funds activities, so we create that networks of relations quite spontaneously, and that's right. I think the good way to address the need to put some money in the growth of company and is to organize sort of competition between the VCs and to be together to be able to co-invest in interesting deals. So I think there was something quite competitive in this business, but we are able to design new strategies, new synergies, and to co-invest in order to be stronger. So I think it's something I see happening right now with either emerging teams like mine, but also with strong teams that tier one teams in Europe. But definitely we need to think European. I'm quite sure of that. The entrepreneurs should think European and world, but the VCs and the investors should also have this kind of approach.
And for me, the best way to make this happen is make sure that we create an environment where companies can scale across Europe very quickly. I think, for me, connecting the ecosystem is enabling companies to expand quickly in these different ecosystems, because at the investors level, we know each other. I think there is a good connectivity there. And so the question is, can you, at the European level, change things so that, you know, from a data perspective, you know, you have unified data regulation across the different countries. So you don't need to create specific data centers for Germany because they want their personal data just hosted in Germany. Either way, from an infrastructure perspective, the challenge on the software side in Europe is that you have a lot of the countries have developed their own solution, especially on the SMB side, and there is not a lot of interconnectivity to these solutions. So when you want to scale, you need to, basically it's very complicated, you need to go and see every local system, develop proper APIs for it. So if you could standardize that, I think that would help a lot. And then the last point is from a labor law perspective, if you could try to, for startups, make the labor laws more unified, I think that would make the cost of expansion lower. Of course, that's much more difficult.
No, I agree with all those points. What I would add is I think the VCs also need to step up and I think help these companies scale globally, right? And I think provide value add for them to go global. And I think the nature, that's why the VC I think has to change a little bit in Europe. It's not just providing money, but I think providing value add for them to make it to the next step.
And if you look at the next 5 years, I mean, everything is going to change, proportions will change, China will be multiplied by 5 and Europe by 1.5. So what would be the good size for a VC fund, a VC team? I mean, typically, how much should Accel have under management in 2025 to be really at the edge of the movement? I mean, are we talking of 5 billion or more or less? Well, what is the future of your industry?
So, you know, we have been in Europe for 17 years. We currently manage 2.5 billion on the continent. And our strategy has been to operate with a relatively small team. So we're about 12 investors. Our fund is around 500 million. And I think the pace of the fund may change. So we may invest, you know, faster or slower, depending on how fast the ecosystem is growing. But we don't have the ambition at this point to have a $3 billion fund to deploy across Europe. I mean, I don't think that's the way we work, and I'm not sure that would be good for the industry.
GVP.
Yeah, so I think it's an interesting point because I agree totally with what Philippe said. We're a bit smaller. We're only close to 1.2 billion, and it's predominantly focused on Israel. But I think what's interesting, we typically have much smaller fund sizes, even small, you know, small 150 million to 200 per fund. But I think what's interesting is that, you know, the more hands-on you are prepared to be, and the earlier you're prepared to go into the process, you know, the more you know you can have for a small investment and a lot of hard work, you can actually have a healthy stake in a company and be actively involved into turning it into a global leader. So I think at the end of the day, I agree, it's not necessarily about the size. It's got a lot more to do with where you are in terms of the food chain, how involved you are with the companies. In our case, we're typically the largest investors, but we also go very, very much at the beginning of the food chain with a mindset of taking it all the way through to exit. So I think that it's got a lot to do with where you are and how the distribution is of the portfolio.
I would add two things to that. I think the best entrepreneurs today, they find money. I think, and they need more than that. I think in this hyper-competitive environment we talked about between Asia and the US, if you want to survive and become the global leader in your sector, I think you need some help to become global. And I think they expect now help to quickly scale globally. So they look, I think, working with funds that have a global presence that can help them enter into these global markets and understand how to do that successfully. And I think they also want hands-on experience to address some of these biggest challenges from talent, from product, from marketing, et cetera, to help grow. So I think it's not about the size of the fund. Obviously, the size of the fund constrains how big your team can be and what kind of operating model you can have. We are slightly bigger than Accel because we have a different strategy. I mean, theirs works really well, obviously. We're trying to have a bit of a different approach with a more global and a more operator-friendly approach.
And if I continue to dig into the future of the industry, how do you envisage the morphing of the model of our companies towards more coaching, more consulting, more presence with the entrepreneurs, with services which are non-financial but soft services?
I think we see a move of a lot of VC companies now tend to propose an all set of services, going from coaching, HR, talent spotting, etc. It also depends on the perspective that you have. If you want to be a very hands-on investor or not. I think we all here are quite hands-on investors, so the value proposition is, of course, relying on the services and your ability to keep the promises that you make. And to come back to what you were saying about companies who want to grow and who want to grow global and who want to go to Asia especially, I think I see a lot more companies which are quite early stage but who think I'd like to address this Asian market. And it's something probably that didn't happen a couple of years ago, because from a business culture point of view, you tended to think that the American market was much easier to address. But I think now it's quite changing. And actually what we're trying to do with my fund is to help companies address this Asian market, which is really difficult. And I'm not speaking, there's not one Asian market. China is obviously one market, but East Asia and Southeast Asia are also markets. So it's quite difficult for a company, but I think it could be a good value proposition to help the company grow global in the coming years.
I think what I'd like to say is that we are seeing a tremendous amount of maturity and sophistication in the entrepreneurs themselves. An entrepreneur is less motivated now by the valuation in the past or the funds. You say that there's a lot of capital out there, so it's really about the services you give, the value added they give. And in the case of Israel, because it's so far from the main markets, it's how do you